following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour. And it is April 1st. I will promise you there will be no April 1st jokes on this show today. So you can believe anything I say. If I tell you to take a butterfly and chain it up to a locomotive because that butterfly will pull that locomotive, you can believe me. I won't be tricking you at all. Anyway, it is going to be an interesting day. We have tested the highs in the market out here. And as we look at a market testing highs, what do we want? We want volume. 1.95 billion shares says will probably come in somewhere around 3.3 billion shares. That is going to be light, of course. Does that mean that we can't go even a little higher? And I have a feeling that until we get the short squeeze out of the way, we will not have a high in the market. And we'll be looking at some of those things. And, of course, an interesting day in history. But before that, we are going to look at a phone call from Frank in Louisiana. How you doing today, Frank?
Hey, David. Thanks for taking my call. I was wondering if you could look at IBM for me. I have some 190 strike puts that expire this week and next week.
Yeah, I mean, you had volume up to the 195 level, so this is not a stock you'd probably want to be short. You tested the 194.89 high of September 19th. It had 3.9 million shares with 10 million shares on the 25th of this month. So you are up at that high. The energy off these lows was better. And also you had a test of the low on less than half the volume. So I would have never been short this stock. The October 17th low, 172.57, 22 million shares came into it, went below it, closed back above it on February 5th with 7.1 million shares. So a bullish chart in every form out here that you can look at. So you say you have one. Go ahead.
High volume low in the past 2 months doesn't have any.
You got tested. It went below it and closed back above it. You had 172.57. It went to 172.19. It did it on 7 million shares compared to 22 million shares. So that high volume low was negated by that test of February 5th. It tested it. Nobody showed up to sell, and the stock started to move. You also had some decent energy coming out of it. You had a decent test of the high. Here's what I think is happening. I don't think anything's dramatically changed at IBM other than one thing, and that is that everybody's trying to go and buy quality now and get rid of the high flyers. And normally that's people call it sector rotation. I call it a rotation at the top, and that is people go from the most dangerous of products to the least dangerous until all of them fail. And in this case, we are in the pretty much the part of the market where we've bailed out of the high flyers like Netflix and some of these others. We're now looking at buying consumer stocks and blue chips, and of course, no bigger blue chip than IBM. And eventually this thing will top out and it will fall with the rest of them. It's just not going to be probably right now. So you had 195s for this Friday?
No, they're 190s actually. I was
for this Friday though?
Yeah, they expire this Friday, and then I have some expire the next Friday.
Yeah. I just think that they're, for a market, half of the trade is having the market on the right side. I have a feeling we're probably not going to top out for maybe another 2 or 3 days. I would love to see what I think is going to happen is we're going to have a day where the market opens up $15 on the S&P cash, maybe up to 1900. It'll gap up there. It'll close. It'll gap down the next day or something, or sell off all the way through, or we're going to have some kind of big signal. But I have a feeling right now a lot of people are short, and it's going to take about 3 days to wash those margin people out. So I think we could see some kind of magical reversal on Friday. Whether or not that's going to be enough to get you to 190, I don't know. Like I said, if I had the 190s, I'd probably trade them for a stock that is much weaker than this one.
Okay. And do the gap ups in the NASDAQ, is that a bearish or bullish indication over the past few days?
A few times.
Gap up on the opens on the NASDAQ.
The gap up on the opens are not necessarily bullish or bearish. It's all about the volume that comes in that day. But for me, what we have here is we had a little market scare. Everybody got short. And normally the markets finally fail when everybody quits shorting. And that the reasons they fail so spectacularly are because there are no shorts as natural buyers to come back in. And when we had that dip, everybody shorted the market, and then they just go back to doing the same thing they do until the markets completely fail, and that is keep marking it up and running the shorts out of the market. They are the natural buyers. They are almost always the weakest of hands, and that is problematic. And one of the problems of being short is that you're going to be right about 1/4 of the time, and you're going to make gobs of money. You're going to be wrong a couple of times. And here, I would say that, I've been waiting for that 1900 on the S&P cash, and maybe we get it, maybe we don't. But I think we're going to get some kind of massive Roman candle signal that no one can miss. I just haven't seen it yet.
Okay.
So
IBM
I would hold
Roman
your powder dry. If you can get most of your money back on those 195s for next week or 190s, I would probably get that cash back as quick as possible and find a stock that doesn't have high volume highs and tested high volume lows.
Yeah, but the reason I went was getting bearish was last Friday's close for the week was a long wick. It was a shooting star, and do you see that on a weekly chart for IBM? And it looks bearish on a weekly basis.
Yeah, it probably does. To me, more important is the volume of that single day when it tests that high. It's hard to say what happens, during 4 or 5 days. But when someone has go ahead.
No, I agree with you. So the weekly chart may be bearish, but the daily doesn't mean we're going to continue to go down necessarily.
No, to me, this is, I've seen it. I've looked at so many stocks over the last probably week, and what I continue to see is people getting rid of high flyers like Tesla and Netflix and some of these others that have dubious valuations and going for the cream of the crop. And to me, that tells me that we are close to the top, that a lot of these fund managers are going to buy stocks that people aren't going to yell at them for being long in a pullback. And one of the stocks you're probably not going to get yelled at for owning in a pullback is IBM.
IBM.
I mean,
is Facebook looking bearish? I have a small short position in Facebook too.
I like that much better as a short position because it's got dubious value. What the problem is that this thing came up and had 150 million shares on the 30th of January. You got into it. Is that right? Yeah, 150. Got into it with 110. So lighter volume, and its volume's been light here the last few days. I could see this thing going back up to 55, 56, 57 and making an ABC, and then on the next run, maybe making enough energy to come down and break this. But to me, I'd like to see this thing jump $1 or $2 or maybe $3 to pull the trigger and go south on it. If the market all falls apart, all these are going to be great trades. The problem is you got to wait, I think, maybe 3 days. It may even be a little longer than that, but I'm thinking we can get the big reversal signal in another 3 days.
Okay.
So
Right.
that's the problem. And being early is not a sin in being short. It is a lot harder than most people look, and you're going to be wrong a lot of times. I don't like the IBM trade. The Facebook one looks better, but I want this to bounce a bit to make your risk reward look a little better.
Gotcha.
Okay?
Okay. Thank you very
Thanks.
much, David. Bye.
Okay. Let's see, what else do we have? Okay. Comment in the ring and registers on Facebook for the last 4 months now. I have a feeling a lot of these stocks of a dubious value. And the problem with Facebook is not that they didn't and couldn't put in one or two good quarters. It is the long term of how fickle teenagers are with spending time, and whether or not you can get that same kind of time on someone playing with their phone as you can getting somebody sitting behind a computer. The answer is generally no. Google hasn't been able to do it. No one else has been able to do it. Google, for when we look at it, hang on a second. When we look at Google, they've done well. They've come off their highs a little bit. I don't like this as a short much either. But to me, this thing could be doing an ABC down, but you'd probably want to get this at 1160 if you weren't short already at the top. And that is the problem. This thing didn't give a really good signal to pull the trigger on it. But if you got probably a 50% retracement out of here, so 1160, 1175, something like that. Of course, we are going into earnings yet again, so that's also problematic. But, this one I wouldn't short. Amazon, if you could get a nice ABC setup on it, some of these would, but some of these stocks actually, probably the loftiest, have made decent tests of the low. Same thing with Amazon. You had the February 5th low with 10 million shares. You got it tested with 5.7 million shares. Now, the whole market's not really moving a lot because no one wants to get into these things. But could you get back up to 360 and then maybe pull the trigger? And when the market and everything heads down, can it break this 337 level? I think you could. But like I said, I'm thinking maybe we get like 2 or 3, 4 days where everybody gets all bullish and very frothy, and we're going to have a market that could be very good. Now, could it fail tomorrow? Yeah. But it's just not giving me a lot of signals right now that we're going to have instant failures in this market. So I'm going to continue to hold my powder dry, as they used to say. Wait for the whites of their eyes. We always like to start off the show with a little history, so we're going to do this a little late. But when we come back, we're going to talk about the NASDAQ and one of the worst days ever it had. Anyway, we'll be coming back in just a minute. I appreciate your calls at 877-927-6648.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, it is an interesting day out here. We're going to be watching these markets very closely as we test highs. Had a comment in the den. I'm going to get to history in just a second. Nothing different than what I've heard before. And the comment is, I've heard 2 or 3 days till market top prediction for months. And that's what I heard, the exact same thing around 2000. In history today, NASDAQ has one of its worst days ever. This is in the year 2000, April 1st. What a prize. Plunging 355 points, or almost 10%, to finish at 33.21, down 25.3% for the week. And this was on the NASDAQ. But tech stocks have largely gone through their valuation adjustment, says Lehman Brothers strategist Jeffrey Applegate, who urges investors to buy. Robert Folick, chief executive of the Kemper Funds, scoffs at the drop is the bear market's brief day in the sun, and adds, this is the greatest opportunity for individual investors for a long time. Thomas Galvin, strategist Donaldson, Lufkin, and Jenrette promises that there are only 200 or 300 more points of downside for the NASDAQ and 2,000 on the upside. It turns out that there are no points on the upside and more than 2,000 points to the downside. And the problem is, for a good, since January 3rd, when Tom O'Brien and I and a bunch of other tigers here at TFNN were short out the yin-yang and the wazoo of Qualcomm. And the thing broke from, 196 to 145 in a handful of days. And everybody poo-pooed it. But what happened was the most egregious stocks in history for valuation, adjust to first. Then there's normally a period where the market rallies again. Then it sells off. And I think we're in that very first part where we're seeing massive adjustments, especially in the sectors that were ridiculously priced. And we're seeing the same thing that happened then. They moved from all these high flyers. They put their money in IBM, and the only thing that happened was it took another 6 months for those to get hit. And, of course, even all the NASDAQ, April 1st, 20 down 25% in a week. Don't think we're in that kind of valuation, but do I think we could get 12 or 15% in a week? I don't think that would be beyond the scope of reason in the near future. We have all the signs. And the question is, did you want to be long coming in to something like the NASDAQ on April 1st just because everybody kept on saying the highs were in? A lot of people said that the highs weren't in. And I think the market is talking. It's telling us what's happening. And the problem is that especially that is the worst part of being short, is that your brethren that are short with you are always the weakest hands. They are always the easiest squozing for the most part, and big, for the most part, big hedge funds, big kind of players on Wall Street have to be long. You can't go out and short 15% or 20% of a stock too often, and that's what we see in things like HLF. And you're going to see that too. But I think there's lessons in the past for people that it's hard to have patience at a top. And I'll guarantee you, going through that early in my trading days, I thought the same thing. Looking back 14 years now, I can tell you that it's not as bad as it was in 2000, but it's very similar. Probably the levels aren't as high. We don't have near as far to fall, but it doesn't feel that much different. And I have a feeling we could pull back significantly. Again, when we look at the markets, I've seen several studies. All of them say that about at least 1/3 of the market's profits right now in the S&P 500 are because of low interest rates. When those start to move up, those interest rates will disappear and melt as fast as ice cream in the middle of the summer on Georgia asphalt. And that will be the problem. What would the stock market be worth if interest rates were allowed to float to the normal level? And that's what I'm looking for in a return. And what would any particular stock out here be worth if they cut off 1/3 of their earnings? That's what we need to be watching. Anyway, we'll be back in a minute. You can call me at 877-927-6648. That's 877-927-6648. Or email me at path@tfnn.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And we are back, and we've got a phone call from John in Philly.
Hello,
How you
David.
doing today, John?
Good. Good afternoon to you, David.
What would you like to talk about today?
David,
And then I need something from you before the end of this phone call. So go ahead.
David, I would like to ask you to pull up FCEL, fuel cell.
I have it up.
And David, let me tell you, yesterday, Monday, I bought this stock at $235. So I am long. What I would like to ask you is, with your work, where would you put a stop? Where would be an appropriate place to put a stop as you see it? And if this starts to turn into a winner for me, can you give me your views on where this may go to the upside?
I wouldn't want it to close below the gap that occurred on the 4th of March. And what was the close on the 3rd? $2.17. I wouldn't want this thing to close below $2.17 at the end of the day.
Okay.
So I think you got fairly decent, good risk reward. Right now, if you're playing this on the bullish side, this thing, you've got about 4 kind of sideways days there. You may get 7 to 10 on this thing. It looks to me like maybe someone stepped in at this level and is willing to support it at this level. But I don't see anything that says this is going to go into an automatic rally. You would have probably had the automatic rally, or should have had the automatic rally that held on the 25th, and you didn't get it. So this thing's maybe going to consolidate for a while, and not a bad trade. So I guess you're looking at that $4.74 high as a possibility.
Yeah, that's the only two things. Two things did occur to me. One, that was a high volume high. Number two, the pullback was definitely on lighter volume. Three, I guess it was the 21st of March. It pulled back to and held that gap, bounced, and then last week on the 27th and 8th came back again to the area of that gap. I was looking at it as a buy on Friday, but I didn't want to take the weekend risk. So when the market opened higher, Monday morning, I said, okay, that's why I'm entering it then. Whether and I don't have any view myself that it should go quickly back to that high volume high. I just thought it was a good low risk spot, so that's what I was doing, and I was curious to hear your view, David. Fuel cell, its rally pattern has been very similar to two other names. One is Plug, P-L-U-G, Plug Power.
Yep, and I've looked at them all.
And then Ballard. And I'm just curious, if you had time, either now or before the end of the show, I'd be curious in whatever observations you might have on those other two names as well.
Well, I have a feeling, what did we talk, 2 weeks ago, about fuel cells being the future of technology and always will be? I haven't seen anything that really changed any of this in my mind out here. Nothing's changed. They're still using gold and platinum for their catalysts. So I don't know what's changed. So maybe gold coming down will help these a little, but I don't know if they're going to help them a lot. It's still $1,200-1,300 an ounce. And
yes,
as long as the cost of production's in the 1100s on gold, probably not going to see a lot of change in that either. What's Ballard? BLDP, David Paul. I looked at this a couple days ago. I was thinking maybe the same thing that you had, but to me this thing looks like all these things want to go sideways for a while, and I'm not exactly sure. I keep on looking at the XLE because, of course, these things are somewhat a thing, and I just don't like the thing that would probably scare me away. The reason why I don't think we've seen any automatic rallies in these fuel cell alternative energy stocks is just what I've said before, which is I think the guys big on the street are buying Clorox, they're buying IBM, they're buying everything that they won't get yelled at for owning. And I think they get yelled at for owning any of these fuel cell stocks. What I dislike about probably another trade on this is the test of like the XLE, where we didn't have a whole lot of energy breaking this December 31st high. Came in about 30% light. So part of that may be the same thing. It's not a horrible trade. It's just I have a feeling that it is problematic in that you've got the XLE up here on lighter volume. Let me put it that way. I'm expecting that whole energy sector to pull back, and I think, what do we have crude down to today? Where's it at? 99.69. So we're off $2. I think I even said watching the XLE last few days. So I think you're going to have this thing pull back and maybe break through with a big sign of strength on XLE. That's probably where I would have pulled the trigger on any of those trades if I felt so desired to do it. But that would be the downside, I think, on those trades.
David, let me just share one thing in response to your oil observation. It was Larry Pesavento last Wednesday who mentioned crude oil was at 101. It looked to be in rally mode. At that time, Larry said 102 looked to be a confluence of resistance and ABC rally target coming together. That was spot on, went right to that level, hesitated for 2 days, and now we're moving lower, and perhaps that 97 swing low of 2 weeks ago was tested. And just one last thing I have to share with you, because I've known you've spoken about gold and silver, and I just wanted to share a thought on the silver market. 1970, just quietly lower. Silver last December never got to and penetrated under the summer 2013 low, which was $18.20. And I just can't help but think silver is poised to run the stops under the DEES 30 first low, that's 1880 or thereabouts, and that summer 2013 low at 1820. And just the idea I'd share with you, David, is if silver does go run those stops, especially under 1820, sometime, in the future, and then rejects that, those lower prices and moves back above 1820, to me that would be just a perfect low-risk buy setup should that occur.
Okay. Now I need something from you.
Absolutely, sir.
Okay. I'm going to read a short piece of an email here. If I remember correctly, you were 100% short, and then after the market took off, you were somehow completely out the next day. I'm sure when the market does take a hit, you will tell us the next day you were already in. And I won't say Chris's last name. But how would anybody have known that I had decided to go ahead and didn't see what I wanted at that test when we pulled back and decided to go ahead and go all cash again?
David, I don't know.
Would you have gotten an update?
My only observation is that I don't think that observation, that email to you, is all following the facts.
Well, I'll tell you, I do send out updates during the day, and they said go all cash. The only reason I brought it up is you said something in the den about me following, my conviction and going ahead and going all cash. So I do send up, for those people that don't subscribe to my newsletters, I do send out updates and say, okay, here I'm wrong. It's time to get out. So that's what I was looking for from you, because I think you said something the day I did that in the den. So
I got you.
Okay. So anyway, that was it. But that's
David,
I'm going to answer two questions here. I thought maybe you'd help me out. But I probably should have clued you in earlier on what I was talking about.
On that one, I apologize.
But anyway, that's it. When conditions change, I change my mind. When the facts change, I do that. And you do too, and I admire that as one of the premier traders in the den.
David, thanks for your help. Good to talk to you, sir.
Thank you. Anyway, you can give me a call at 877-927-6648, or you can email me at tfnn.com. And whether it's nice or not, I'll try to respond to it. But I'm not magically in and out of the market. For people that subscribe to my newsletter, I send out updates when I decide to change my mind and when the facts change. And, is it going to take a few more days? I think so. Could happen today. Could happen tomorrow on a market top. But at the moment, I'm not willing to be long, and I'm not willing to be short. And before the market went back up to these highs, I did cover my shorts. So it's not always going to be roses. And like I said in the den a few days ago, if it was all this easy, everybody'd be doing it. Trading is probably one of the hardest things you will, if not the hardest thing you will ever do in your life. And all you have to do is find somebody that's been in trading for long enough. And if they tell you it's easy, you know that they're not telling you the truth, because it is one of the hardest things you will ever love. anyway, I had somebody PRLB. I don't know if that's for me or not. Wanted to get back to some other stuff. We never got finished with all the news out here. I wanted to go through a few things. I've got about 3 minutes. Anyway, let's go through this just because I thought it was so interesting. There was an interview at 1 o'clock on CNBC where they had the author of the Flash Boys. It's getting a lot of traction out here the last few days. Someone put together the odds that you could, in trading, make what Goldman, Citibank, and Bank of America and Goldman independently posting 61 winning trading days in a row through high-frequency trading are roughly the same as the four best friends in completely different sides of the world, each winning Powerball, getting attacked by a shark, and dying from sushi poisoning on the same day. And that's risk-taking. But interestingly enough, their odds were off just a little bit. I would add, and then getting the rotten corpse eaten by a bear. But there's no kind of winning trades like that unless you already know the answer to every trade, and that is part of insider trading, how they made that money. He also had some decent quotes out here during that interview. Michael Lewis is the guy that wrote Flash Boys. Liquidity is not the same as volume, and a lot of people on Wall Street are trying to push that out. And here is the answer. If you're not providing liquidity, you are not taking risk, and you are if you're not taking risks. So when everybody tells you high-frequency traders provide liquidity, the answer is no. What they do is they've got a faster system than you. They see you place the order. They probably put it up a half a penny, 2 pennies for each share. They get in the way. They collect their 2 pennies and they're gone. They are no different than the mob. And interestingly enough, probably one of the weirdest interviews of CNBC for a long time. Interestingly enough, there's some other stuff on page 106. I love the fact that he cited a study that more than 200 SEC staffers since 2007 have left and gone to work for high-frequency traders or their lobbying firms. And we still have that. Today, William O'Brien, no relationship to Tom O'Brien at all, who's I think he's the CEO of BATS Trading. They are a big trading firm and highlighted because they have the closest firm to Wall Street and huge in high-frequency trading. But he said something, and our friends over at Nanex posted the answer to it, basically saying, nanny, nanny, boo-boo, you're lying. And that was that they aren't rigging the game. And it's pretty well shown, if you want the link out here, that they are monkeying with the timestamps on these trades to make it look like nothing's happening. And I have a feeling that's where the FBI is looking right now, and we're going to find out. And like I said yesterday, it's not that they're stealing huge money each time. It's a little each time, but is it really any different? We're going to be back in just a minute.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
Well, I see that they're grilling the CEO of GM on the TV right now, so in front of the Congressional Committee out here. We are at 1882 on the S&P cash. When we look at that, of course, we want to be watching the volume. I think maybe we've got just a little higher to go. I know there's a lot of frustration at these highs, and the frustration is always, I want my money now. I want the market to do something to give me my cash now. And people, when they basically say that, normally I know the answer. Tom O'Brien told it to me. Other traders that have been around a long time have told it to me, and that is your impatience is probably the worst thing that you can have. The market's going to move when it does. You wanting to wish it is not an answer. And the question is, okay, market's got to be going higher, so I know I have to be long right now. And the answer is, so if you knew it was going up 10 points, and maybe there was an 80% chance, but there was a 20% chance that it was going to open up 50 and be down 100 points before you could blink your eye, let's say on the S&P cash. Does it make any sense to actually have that long on? And the answer is, to me, is no. And unfortunately, that is the hardest thing to get by as a new trader. That is, sometimes the short money, the fluctuation, it calls out to you. You've got to be long. And normally, if you're not trading within milliseconds or minutes or even on a 10-minute chart, if you're trading like I do over days and weeks, the right things to do is sit back and wait for the signal. To anticipate it normally is problematic. Normally to wait for it and react is better. We've gotten at least technical sell signals tons of times. Not all of them will be right. We've gotten so many, though, that it's led a lot of people to believe that they should be long. And there is a reason why the market sucks in as much money as it can at the top, and that is that most people start saying that there are signs of weakness in the market. They don't want to be long. A lot of people don't believe it. They finally decide to pile in, and one day it all evaporates. I would say that if you want to get long, it is your money. I would not be long now, but that is one man's opinion. And it is problematic to think that experience has nothing to do with it. We can teach you a lot here at TFNN. One of the things that we can't teach you is patience. I bring this up many times, and that was that I had a friend that worked at a business that bet in car stereos around 1980, early 80s. Back then, it wasn't easy to put in a car stereo. Only certain things fit in certain cars. Most of the manufacturers made it hard to retrofit car stereos, so you'd have to buy theirs. And this company did something different. It took all its people that were going to be salesmen and shoved them in the car install bay for a year. They had to install these things. When they came out, they put them on the sales floor. They knew what everything would fit in it. And that's the difference between trying to tell people something and letting them acquire the knowledge. The only way that would work is acquired knowledge. And unfortunately, part of being a stock trader is going to be going through years and years and years of this until you've learned things. And some things you can only learn by doing them and waiting for them and appreciating what you learn over that time. I want to appreciate everybody that listens to this show every day. Remember to sell when you can, not when you have to. And we'll see you tomorrow. Same bat channel, same bat time.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.